$438 billion in one quarter. The mega deal is officially back from the dead.
Barely. Intel is spending $14.2 billion just to buy back its own Ireland factory. That's not a real mega deal.
Oh, come on. We had 12 deals over $10 billion. The market is rewarding aggression again.
If you're European, sure. North American buyers are still getting punished by Wall Street.
Which perfectly explains why private equity is suddenly panic buying nut milk and aviation security guards. Speaking of that weird shopping spree, the rundown. $438 billion in a single quarter. Wall Street is officially back on its nonsense.
12 mega deals over $10 billion. 155% jump in deal value year over year. It is a sheer panic to secure AI infrastructure and put cheap debt to work.
And the market is actually cheering for it. Acquirers doing deals over $100 million are outperforming their indices by 2.5 percentage points. Investors are finally rewarding aggressive growth again.
In Europe, maybe. European buyers are outperforming by 6 points. North American buyers are still trailing their indices by 5.4 points. Wall Street is definitely punishing domestic buyers.
Oh, come on, they are not punishing them. The North American deals are just vastly more complex right now. Look at the middle market rush. Private equity is absolutely scrambling to deploy dry powder before valuations spike any higher.
Which brings us to the rundown. HG just closed its massive $6.4 billion buyout of software firm OneStream.
Classic sponsor play. But my favorite weird deal of the week is Danone dropping a clean $1 billion on Huel.
The protein meal replacement powder?
Yes, the official sludge of Silicon Valley tech bros is now owned by a French dairy conglomerate. It is beautiful corporate theater.
I prefer the infrastructure plays. Ecolab just spent $4.75 billion to buy CoolIT Systems.
Wait, really? Ecolab, the sanitation and water treatment company, buying a data center cooling business?
Like I said, AI panic. Everyone needs an artificial intelligence angle. Liquid server cooling is technically water management if you squint hard enough.
I am squinting very hard and I still see a wild pivot. What else do we have? Rip City Rising officially took a majority stake in the Portland Trail Blazers.
You know, I refuse to analyze sports team valuations. It is entirely fake math based on billionaire egos.
You hate fun? Fine, real math. Gilead drops $2.2 billion on Ouro Medicines to beef up their autoimmune pipeline.
Right on the heels of the $2 billion Novartis deal for Synovation, that mid-cap pharma defensive wave we predicted is officially happening.
Speaking of defensive moves, we need to talk about the elephant in the quarter. Intel spending $14.2 billion just to buy back a 49% stake in its own Ireland fab joint venture.
A massive capital restructuring hiding behind a mega deal headline. The footnotes on this one are wild.
Let me guess, you spent the weekend reading them. So tell me why Intel is paying a premium for its own factory right after the break. The big one. $438 billion in a single quarter. I had to refresh my terminal 3 times to make sure it wasn't a glitch.
It is not a glitch. First quarter of 2026 is officially a 5-year high. 12 mega deals over $10 billion. The debt markets finally woke up.
Woke up? They chugged 3 Red Bulls and sprinted a marathon. It is an absolute arms race out there.
And leading the pack is Intel. $14.2 billion to buy back a 49% stake in their Ireland fab joint venture.
Which is classic Intel right now. They spun that stake out to raise cash, and now they are buying it back. It is expensive, but they need total control over their manufacturing if they want to win this AI infrastructure war.
Is it actually smart, though? I read the footnotes on this structure. They are paying a massive premium just to undo their own financial engineering because they suddenly realize they need the capacity.
You have to look at the big picture, Maya. The market is finally rewarding aggressive growth. Acquirers doing deals over $100 million are outperforming their indices by 2.5 percentage points. For the first time in years, buyers are getting applause on Wall Street.
Oh, come on. You are cherry-picking the global average.
I am quoting the actual data.
Look at the regional split. European acquirers are outperforming by 6 percentage points. North American buyers are still trailing by 5.4 points. Wall Street is absolutely punishing North American dealmakers. They are not applauding Intel. They are holding their noses.
Okay, fair. The US bankers are definitely crying into their Patagonia vests right now because London is getting all the love. But you cannot deny the AI premium. It is infecting everything.
You want to talk about AI infection? Look at Ecolab.
The industrial cleaning guys?
Yes, the water treatment and sanitation company. They just dropped $4.75 billion on CoolIT Systems.
Wait, really? CoolIT? The data center cooling company?
Exactly. Ecolab is making a massive infrastructure play because liquid cooling for AI servers is suddenly the hottest market on Earth. Pun intended.
A nearly $5 billion pivot from hospital sanitation to server racks? That is actually smart. Everyone is selling pickaxes to the gold miners, and Ecolab is over here selling the ice water to keep the pickaxes from melting.
That is a terrible analogy, Nate.
It works, and you know it.
What it shows is that nobody wants to miss the train, and it is not just tech. We are seeing private equity scramble to deploy dry powder into the weirdest niche assets before valuations get completely detached from reality.
Which explains why Danone just bought the protein shake bros at Huel for $1 billion.
And why Gilead dropped $2.2 billion on Ouro Medicines. We should actually look at that pharma defensive wave next, because Novartis is definitely watching that one closely. Voices.
So I am looking at this analyst note, and the headline is basically that the M and A penalty box is officially closed.
I read that same note. The one claiming buyers are outperforming their indices by 2.5 percentage points on deals over 100 million.
Exactly, which is huge. For the last 2 years, if you announced a big deal, your stock got hammered. Now the market is finally rewarding aggressive growth again. It is a total psychology shift.
I am going to stop you right there because you are falling for the aggregate data trap.
Oh, come on. 2.5% outperformance is real alpha.
It is real, but it is not North American alpha. If you read the regional breakdown, European acquirers are outperforming by a massive 6 percentage points. North American buyers are actually still trailing their index by 5.4 points. Wall Street is still punishing domestic buyers.
Wait, really? 5.4 down?
Down. Europe is carrying the entire average.
Okay, that is wild. So Wall Street bankers are sitting here wondering why they are getting zero applause while London and Frankfurt get a standing ovation.
Exactly. And the private equity sponsors know it. Look at what they are actually buying right now to deploy that dry powder before valuations climb. It is not all AI infrastructure.
You mean you do not consider nut-based ingredients and unarmed aviation security to be cutting-edge tech?
I mean, Danone just dropped $1 billion on Huel.
The tech bro meal replacement? I used to drink that when I was pulling all-nighters doing pitch decks. It tastes like chalk and ambition.
Beautiful. Well, speaking of ambition, I want to see if this big pharma momentum actually forces some defensive moves tomorrow.
Right, we need to talk about Gilead and Novartis. Plus, I want to get into the weeds on Intel dropping $14.2 billion to buy back its own joint venture. Spill the tea. Unarmed aviation security. Just picture that pitch deck.
I'm still stuck on nut-based ingredients. Private equity is officially scrambling right now.
They're desperate. Sponsors are sitting on mountains of dry powder and valuations are creeping up. They're buying whatever middle market niche they can find before prices get totally out of hand.
It's amazing. We just watched Q1 deliver $438 billion in deal value. We had 12 mega deals over $10 billion. And meanwhile, some PE associate is doing deep due diligence on a macadamia nut processor.
Hey, whatever pays the carry. But the real gossip in the banker group chats right now is this massive transatlantic divide.
Oh, the regional performance data. European buyers are outperforming their index by 6 percentage points. North American buyers are trailing by 5.4 points. Wall Street is genuinely offended.
Which I kind of get. Globally, the market is finally rewarding aggressive growth. Acquirers spending over $100 million are beating indices by 2.5 points. North America is just dealing with temporary indigestion. Give it a quarter.
Indigestion? Oh, come on. North American buyers are getting punished because they're blindly overpaying for the AI arms race. European buyers are acquiring actual cash flow.
Okay, speaking of cash flow, Danone is dropping $1 billion on Huel.
Wait, the tech bro sludge?
Exactly, $1 billion so they can own the official liquid lunch of Silicon Valley.
Honestly, the margin profile on powdered food is probably better than half the software deals we cover.
Fair point. But if you want to see where the real defensive spending is about to pop off, we need to look at biotech.
Absolutely. With Gilead dropping $2.2 billion on Ouro Medicines, the mid-cap pharma space is about to get very interesting. Tomorrow's radar.
Keep your screens awake tomorrow morning for mid-cap pharma. With Gilead dropping $2.2 billion on Ouro and Novartis buying Sinovation, we are going to see a massive defensive wave.
I don't buy it. North American buyers are trailing their index by 5.4 points right now. Nobody rushes into a defensive deal when their stock gets hammered for it.
You are ignoring the FOMO factor. Boardrooms are terrified.
Then look at Europe. Their acquirers are outperforming by 6 points. If we see a wave tomorrow, the buyers will have European passports.
Okay, but what about Intel? $14.2 billion to buy back that Ireland fab stake. I guarantee a rival chip maker panics tomorrow and restructures a joint venture.
A panic restructuring? Nate, you're projecting your old pitch decks again. These are multi-year infrastructure plays, not impulse buys at the grocery checkout.
A guy can dream of a Friday morning frenzy.
Keep dreaming. We will see you tomorrow to find out who actually signed a term sheet.